Hey everybody, welcome to Trading Capital's daily live stream of the market open. It's currently March 22nd around 9:13 a.m. We have about 17 minutes to kick off this opening market session. You can see here that the S&P is significantly off of the pre-market lows. However, right now it's just basically slightly leaning to the negative side. The ES is positive, the SPX futures are just slightly negative, Nasdaq is slightly negative, Russell slightly negative, but overall it's just a really flat day all around. You're seeing gold flat, the dollar just slightly negative, silver's kind of just eking out a small little gain. Bitcoin's surprisingly just holding up a little bit of its gains right now. But what is today? Today is one of the biggest milestones for the stock market and economic policy in history. FOMC is set to raise rates by 25 bips. That's at least the market consensus. Powell, it's really going to matter of what his tone is. Does he come out and soothe the markets and wipe away that banking crisis fear? Or does he give more of that hawkish stance which reignites more fear and causes more contagion and a little bit of downside risk? I think he's going to soothe the markets, but I think he's going to stick to his guns and try to keep that inflation fight going. I think he's going to say we've plugged the holes, we've provided some temporary liquidity, which I don't think he's going to emphasize that it's QE. I think he's going to have another fancy term for it, for this discount window, because we all know that the reporters are going to grill him in the market session based off of this Federal Reserve balance sheet expanding by $300 billion and then this discount window that is opening, roughly JP Morgan saying they're going to need about $2 trillion. So overall, there's going to be some tough questions for Powell, but I think he is well equipped to handle it. And I still in the camp, based off of what the ECB raised, even though Credit Suisse blew up 50 bips. And then also it's interesting. So what I want to show you quickly is here, the JP 10Y. Let me just pull that chart up. So this is the Japanese 10-year yield. And it is actually up on the session. That's the wrong one. So the Japanese 10-year, oh, that's the wrong one. Let me just pull it up here. Just give me 1 second. But the JP10Y is actually up over 40% right now. So let me just type this in, Japanese 10-year yield. So it should be, let me just find it here. So you can notice here that the Japanese 10-year yield is actually gapped up to the upside, and it's up over 40%. I mean, the Japanese bond market is very, very wild, but being the fact that they hold the most amount of U.S. treasuries and denominated U.S. assets and debt, are we potentially seeing a little bit of insights from the BOJ saying that, okay, Powell is going to be raising rates based off of their rate environment acting to the upside? So those are little nuances I'm paying attention to. And then also what I'm paying attention to right now is gold. Gold, we've been discussing so much of gold's price action with our members, giving them cycle work, tons and tons of analysis. We even had an intraday level on gold yesterday, which it tagged to a T. This was the trading level we put on the screen in the live room. Look at that level. Gold tagged it to a T. These are not just coincidental numbers that we give out. We like to back up our thesis and analysis with mathematical calculations and technical levels to give us the best probabilities here. But overall, what is gold now doing? Gold is potentially putting in some bearish consolidation. The big level I'm watching on gold is, do we get another close below this upsloping trend line? I'm going to remove that one. But the big question is, do we get another daily close below this trend line? You can see that we had a daily close yesterday, and gold is just really struggling at that level. That's the big technical level. If gold confirms back below this trend line over here, we're likely going to test the support range at 1809. And if that is the case, I still think gold actually goes a little bit lower in the grand scheme of things. Obviously, we have technical levels that we will buy and trade around. But as of now, I think that gold is signaling to us that there's potentially, it is a Fed rate hike coming, and we'll certainly have to pay attention to that. Bitcoin's actually getting a pop right now. It's screaming to the upside, just a slight little intraday 10-minute pop. We're also seeing GameStop, Carvana, a lot of the meme stocks running to the upside. I mean, the old saying is they are the last ones to get the liquidity, but the first ones to remove the liquidity. So we've seen numerous examples where these meme coins pop tremendously right ahead of these important key dates, almost as if market makers like to rope in that retail money thinking, oh, the bull market's back on, because what was the hype in 2021 and 2020? It was all these crazy meme stocks, GameStop, AMC, Carvana, AI and AFRM, all these crazy companies. And yes, GameStop did have a better than expected earnings, but when you look at the estimate wasn't even that good. So overall, we'll just continue to watch GameStop. That is on the radar for a short trade. Basically, I like GameStop, anything above its pre-market pivot high. So I'll actually just mark this on our screen. And we'll this one's high risk, and just be careful because it does require a great deal of margin if you're trading short in a margin account. So it's risky. It's super risky, which is why it's more expensive to trade in terms of the borrowing fee and the margin requirements, because this thing could squeeze. But when we think about who holds the largest amount of GameStop exposure, it's not retail. It's actually Vanguard. So just be careful because these funds do have a lot of weight, but I think they're using this as exit liquidity to basically dump their positions. Now, the big important thing is the dollar. The DXY is getting bullish intraday buy signals. You had a nice little move up, but it was rejected and slammed down yesterday. And now it's actually working its way up on this new day and putting in potential bullish consolidation. The Dixie has been oversold compared to the market. Even if you look on the daily chart of the Dixie, basically, look at where you're at. You're at this previous bullish consolidation range breakout, and now you've retraced back down to that since this banking crisis started, since people are expecting that, oh, the Fed is bailing out the dollar's going to get demolished, it's going to get inflated away. I don't believe that yet. I mean, that money hasn't worked itself through the system as we think, and when you factor in what the dollar is compared to, yes, the Fed may be printing this money and providing banks to meet their deposit requirements. In reality, that's not that inflationary, because if you factor in that the depositors are likely going to get bailed out, which I agree with, depositors shouldn't be on the hook for malinvestment, and then you look at some of the investment side that aren't getting bailed out, that is actually net deflationary. So certainly pay attention to the dollar because I think that's going to make a move. But being the fact that the dollar is at support, you've had a nice move down and another nice move down. This favors a technical bounce off of this level, and if the dollar really gets going to the upside like I think it can still, we should see this market under some near-term pressure. Obviously the Qs are important. Take a look at the Qs. They're on watch for a technical breakout, but they've had a stellar move. One of the things I informed my members of last night is basically look at this move in gold or in the Qs. You've had basically 4 straight up candles, 1 consolidation, and then another 2. So out of 7 trading days, you've had 6 green, 1 pause consolidation day. Look what gold did. Gold had basically 3, 1 pause, and another 3. That's 7 days, 6 out of 7 days of straight upside, and then 2 hard down days. So are the Qs in store for a big pullback matching the gold price action? It would certainly likely favor at least a pullback back to this breakout trend line, and then that's where we really get to see what the bulls are made of. Alright, so we're keeping GameStop on the radar for a short GME above that pre-market high. I will obviously call out a level if I get filled. And then we're also watching Tesla for a short. Tesla's acting very well, but the Tesla level is much farther away. Basically, the Tesla level that I have priced in would be at 202.70. 202.70. Basically a pierce of that level. 202.70 we would short Tesla. It has had a phenomenal rally to the upside, and I think that it is getting definitely extended in the near term. Let me just see if there's anything else on my radar as we head into this market session. Apple just went negative. AMD is negative slightly. Natural gas is under a little bit of pressure this morning as well. China stocks are seeing some distribution. Bitcoin's positive, so certainly that's healthy. Let's see. Coinbase just went positive. Let me see what else we have going on. Some healthcare stocks are seeing some money flow, potentially moving defensively here. You have some of the DKS stocks, consumer discretionaries, slightly lower. Some of the commercial real estates are responding well. They're positive, but Lennar, one of the home builders, is down. You have McDonald's slightly positive. Meta just turned negative. Microsoft's basically flat. Nike's down 2%. That's an interesting one. Bitcoin's seeing some sell-side pressure, so you had a pretty intense pop there to the upside, but it is seeing some sell-side pressure as of now. So definitely keep Bitcoin on the radar. But I find it interesting that Nike's down a couple percent. Nike. So look at this move in Nike. I mean, a big pop yesterday and then a big drop. and now you're starting to trickle down. So Nike's certainly under a little bit of pressure this morning, so we'll have to continue to watch that. We'll keep the spiders on the radar because that's going to be the main focal point of this market. Just scrolling through some other charts here. RF is down. Let's see some of these other stocks. UNG, that's down. UVXY is down. BTR. Let's just take a look at that. Let's see how Walmart is doing. Walmart's just basically flat on the session. Obviously, I'm also watching UVXY. It's actually at a nice buy level right now. And I'm actually going to pick up some UVXY and add it to my position here with my members. This is a swing trade, but it is at a semi-decent day trading level as well. So I'm just executing a buy order here for VIX. So we'll flip back to the spiders here. So the trades we're watching, Tesla, GameStop, and we'll see what else comes on the radar. But the markets are set to just basically be flat at the market open. And then we'll have to take it from there. Obviously, the 2-year yield is up at around 4.233%. On the daily chart, it has recaptured the 200 daily moving average as well as that bullish upsloping wedge. So again, just to touch base on the 2-year yield. Let's touch base on this 2-year yield here. I'll flip to the daily chart. As we can see that clear, you can see the daily chart of this 2-year yield. Nice wedge pattern. You've never ever got the technical breakdown. You got a beautiful bottoming tail with followed through by 3 additional positive days. So I still think the market, the bond market, has severely mispriced the Federal Reserve rate here, because in the grand scheme of things, if the Fed raises by 0.25 bips today, that takes us back to 5% up here, which is the FFR rate. So that is a pretty big discrepancy, and that leaves a lot of room for yields to rally to the upside. And I think maybe we don't get all the way there, but I still think we have to come up and fill this gap, which should put pressure on the overall markets when you factor in that, yes, this was a massive decline, and basically the Qs, tech, took advantage of this decline, but now we've had a 3-day rally, and the Qs really haven't responded in turn to rising yields. So I find that very, very intriguing at the very least here. Now, Apple's chart does look a little bit bullish. It looks like it could push to 163. So maybe they continue to disguise this weaker breadth market with the mega cap techs. That's certainly what I'm paying attention to as well as we move through these market sessions. But it's really interesting to see the breadth really deteriorate in the market, but tech, a very few select tech companies are outperforming to the upside. So right now the dollar is softening slightly. And it's interesting to see that the data that we got out yesterday doesn't support a more dovish Fed. You had home sales drastically pick up, and that's super inflationary if the real estate market is starting to boom again. But the dollar's softening quite substantially here. Definitely is. Let's take a look at natural gas. Natural gas did have another flush down this morning, but it is trying to be defended. And the beautiful thing that I'm observing on natural gas is you did basically try to flush and break this key support trend line that I've been watching. And you saw it pierce above this level. The bears tried controlling it again. And you had a beautiful, beautiful bullish engulfing on the hourly chart to recapture that trend line. So I remain bullish. This is a healthy, nice bullish consolidation, primed and ready to move to the upside. But as with any pattern, things can always fail. But at this point in time, I still remain bullish on natural gas, even though it is down on the session. And we can actually play this for a long trade as well via Boyle or UNG if this pattern gives us a little bit more consolidation and a breakout signal. So I'm certainly watching that on my other screen. Let's continue to watch the S&P 500. I'm just going to erase all these trend lines, start fresh. The channel that I'm looking at is basically, let me just go to the regular trading hours here. So you can see the spiders are at some near-term resistance. Gold is catching a little. Bitcoin's actually popping to the upside here, really taking advantage of a weaker dollar. So we'll have to see and keep monitoring Bitcoin, but it is moving up here. It's at 28.3. It's having a nice little bid. So we'll keep watching the S&P. So we have about 1 minute to the market open. So keep your charts ready. Wits about you. I'm watching GameStop. I'm watching the spiders here. I'm going to actually pull up the GME chart here. It's super risky. Just know that. Alright, markets are open. Spiders are seeing a little bit of near-term distribution, but nothing crazy yet. Nothing crazy yet. Coins seeing Apple's starting to push up. Look at GME come in here. Let's take a look at the spiders. Spiders are just really kind of flat on the session as of now. Nvidia is starting to see some distribution coming in off the highs. Tesla's still pushing up. IWM is looking weak. So the IWM is looking weak. Look at this Carvana chart. Let me see if we have a trade on Carvana. Carvana is starting to come in, but it gapped up, and this is going to be a pump and dump. Realistically, the bond offering that Carvana is doing is not good. It's very dilutive. Very dilutive. So look at GME, Carvana come in, very similar charts. And notice how all of these meme stocks are gapping up together. I find that very intriguing. Bitcoin's still acting well. Gold's still trying to put in some bearish consolidation. Natural gas is still negative. The Russell's acting weak right now. Russell's acting weak. GameStop's up 45%. Carvana's up 2%. JMac, you have a lot of these meme stocks catching a bid right ahead of the Fed. I find that so intriguing. SoFi, First Republic's down, PacW's down, Tesla's up, AMC's up. Nvidia's holding on to positive gains. Microsoft's negative. Google's negative. Meta's positive. Alcoa's negative. Spiders are coming in. Let's flip back to Carvana. So that's also coming off the highs. GameStop coming off the highs. Look at our UNG here. That's gapped down. Let's keep our eye on the spiders there. The Qs as well. Qs are very important to this market. The IWM, that's showing a lot of weakness. IWM's leading this relative weakness. Look at this, taking out these consolidations from yesterday, potentially making another closing low in the next 5 minutes, whereas the Qs are still holding well above. So definitely weakness could be creeping back into banks. So definitely pay attention to that, because the market does not like weakness in banks. I know that for a fact. Meta had a huge pop. Wow, nice move on Meta. If Meta pushes all the way back up to this double top zone, it is a short trade. So keep Meta on the radar. Definitely keep Meta on the radar. I'm super interested in potentially shorting Meta. Oh, that's a nice move on Meta. Nvidia is still trying to hold some gains, but it's very close to going negative. Apple's seeing some distribution. Tesla's seeing distribution. Let's keep our eye on this IWM here. Look at this IWM, still acting very weak. It actually is negative. The IWM is negative. Spiders are coming down. Dixie's starting to catch a small little pop. Gold is rallying. Banks are seeing some distribution. Let's take a look at the energy side of the trade. XLE is coming in. XOM. XOM's had a nice little bit of a rollover there. Let's take a look at the oil chart. Ooh, big rollover in oil. Look at that gap move up and then a big rollover. That's not positive. That's a little bit of an economic signal. Maybe the dollar is going to catch a big bid here. That's what oil could potentially be signaling to us. UVXY, so volatility. I picked up volatility in the pre-market with my members around that 518, 519 level. That's catching a nice little bounce, but I don't expect the markets to do anything too crazy. I think the action will obviously be on the rate hike decision, the initial move, and then we'll see either some follow through based off of Powell's comments. Basically, markets are very quiet, trying to catch a small bounce. Dollar's also trying to catch a bounce. Look at the Dixie, trying to break out of that flag pattern. Keep the spiders there. I am going to follow the Russell because I like to watch the Russell. The Russell's going to give us an indication of any bank weakness, which I like to know of. Right now, healthcare stocks have caught a small little bid. There is some money flowing into healthcare. Russell's acting weak. Nike's down 2%. DKS is down. Hyatt Hotels is coming down. GameStop's up 42%, but that's still trickling lower. I think we're seeing this exit liquidity dump. I mean, look at how, notice this huge volume. I mean, look at that volume right at the open. That's a liquidity dump by a large institution just roping in that retail. And I think it's very similar to what Carvana is seeing. Massive volume at the open. Roping in that liquidity retail. Spiders are coming down. Russell did make a new closing low. Again, tech is holding this market up. Single-handedly Apple is holding this market up. But Apple is so extended on Apple, and I'm actually eyeing up Apple for a intraday short level. So I do like Apple for a short. It's not at the level yet, but it could push up there because Coinbase is trying to go positive. Bitcoin's trying to see some more upside pressure. AMD's catching a bid. Tesla's pushing back up to the positive side. So keep Tesla on the radar. That 202.70 is still viable and intact. Nvidia is starting to push back up. Again, one of the most expensive stocks in the market as of now. Spiders are catching a bounce. Tech is catching a bounce. So is the Russell. Bitcoin's trying to push up. Gold's also catching a bounce. Apple, Nvidia pumping, pushing up, trying to lift this market. And I do like Apple for a short, so keep Apple on the radar. I would like to see Apple. Basically, we can look for a short on Apple. Just give me 1 second. If Apple was to push up to 160.50, we could start a short position, 160.50. Tesla's pushing up. Markets are pushing up. Resiliency remains in tech. Weakness remains in the IWM. but the resiliency remains in the tech space. Nvidia new high. Wow, Nvidia just made a new high, pushing 266. Crazy, crazy. Even from a fundamental perspective, I mean, that is just astonishingly. And the more we rally into the Fed, the more likely it is that Powell crushes these markets down. That's just my perspective. So again, if you're long, it's wise to protect profits. You can always re-enter. I'm still watching Apple. Apple's pushed up tremendously well. Tesla's up 1.2. GameStop has pulled off. It's dropped basically 20% from the highs. Let's keep an eye on the spiders here. And the Russell, how's the Russell doing? The Russell caught a little bit of a bounce. Notice how it retraced back to those pivots, and now it's seeing a little bit of minor distribution. AMD's pushing up. Meta's basically reversed most of its gain. I find that intriguing. Look at that nice little topping tail. Apple's still pushing up. Nvidia's still pushing up. You know what? We actually do have a potential short on Nvidia as well. The level I like on Nvidia, let me just erase some of these. The level I like on Nvidia for a short, day trade short, is a Pierce of 267. A Pierce of 267. So it's approaching that level now. So keep Nvidia. The dollar's catching a big, big bid here. The dollar is catching a big bid. $267. Keep Nvidia on the radar. We will short at 267. Here it comes, guys. It's pulling off of that. It's pulling off of that level now. Just missing our 267. Look at this dollar surge. Look at that dollar. Let's take a look at the SMH. Rolling over. IWM. Notice how the weakness in the IWM should lead this market lower. It's just being disguised by tech, disguised by Nvidia, AMD, Tesla, Apple. Very few stocks. Let's take a look at Mr. Softy here, because MSoft definitely put in its high, which is why we executed a short. This is a beautiful collapse. Microsoft's actually negative. So again, pay attention to the big mega caps. Like the second largest company right now is negative when tech is actually catching a bid, which shows you. So Nvidia's still on the radar. Keep your eye on Nvidia. It's fighting that level. There's clear resistance there. Tesla's rolled over. Apple's still remaining strong. I still like Apple at 160.51. 160. It's pushing up. Apple's squeezing. They're disguising this market breadth through Apple and Nvidia and a couple of the other big boys in the market. Carvana's starting to roll over. Nvidia's up 1.74%. I don't even know from a fundamental perspective what the PE is, but it is massive. Apple's seeing its first little signs of distribution. Definitely keep Nvidia on the radar. I like Nvidia for a short, but we need to see it pierce that level. GameStop's coming down. Tesla's coming down. Gold saw a little bit of a hit. It's probably responding to the dollar now. The dollar is potentially trying. Let me see if the dollar's positive. The dollar's trying to go positive here. It's not positive yet, but it's trying. And you're seeing weakness in some of the banks. Not all of them, but some of them. Seeing the KRE down slightly. Nvidia's still battling. What a powerhouse. This could be a short squeeze. This could be a FOMO rally. There's a couple different emotional triggers here that could be occurring. Keep Nvidia on the radar, guys. Spiders are coming down. Come on. One more little push, Nvidia, and we will go short. One more little push. 15 cents away. We were 7 cents away. We're just teasing us with this level here. Alright, now it just pulled off. Look at that reversal. So close. So close. They missed us by pennies again. And the spiders are now rolling. Testing the low, the intraday low. The IWM just made a new low. Nvidia, I'm still watching Nvidia. It's coming back up now, guys. So definitely keep it on the radar. Nvidia is trying to push back up. Tesla's rolled over substantially. Tesla has rolled over substantially. Alright, I'm going to grab some Nvidia short here because I'm seeing these markets under a little bit of pressure. So 266.67. I just got filled on Nvidia short. 266.67. Oh, Nvidia just slammed through that level. So Nvidia is squeezing higher some more. Market makers are pumping this stock up. Pumping it. The next add level I would do on Nvidia is basically $1 higher. So 267.66. 866. Tesla's rolling over. Meta's under pressure. Apple, Nvidia are the powerhouse stocks. So get ready on Nvidia. We will add again. 267.66. It's almost there. About 9 cents away. 3 cents away. Alright, I just got filled 267.68. That's a 2-6 position. Short. Nvidia's up over 2%, and this stock isn't like it's just had a one-day rally. This thing is just a beast. A beast. Banks are starting to roll. IWM, brand new low. Natural gas is perking up nicely. Coinbase rolling over. Bitcoin took a dump. Look at this rollover on Coin. Coin and Nvidia have been really the stocks that have defied odds. So when you start seeing Coin roll, I saw an instantaneous red candle on Nvidia. And the dollar's popping. Natural gas, nice bid. Russell's at the lows. KREs are rolling over. Tesla is getting demolished. Wow. It's very surprising to see Tesla under that amount of pressure. So we're just 2-6 positions short on Nvidia. We've actually traded this. I believe it's our third time in like the last week. The Dixie's surging up. That should help things. Gold is seeing some pressure. Just be patient. Nvidia's way crazily overvalued. Spiders are trying to catch a bounce. Still under pressure. Nvidia's seeing some little bit of minor distribution. Very minor. I still find it interesting that Tesla's rolling over. AMD's seeing some minor sell side pressure coming. Let's take a look at the semis, SMH. So maybe the semis can push up to that area, but again, Nvidia is definitely outperforming the semis by 1.25%. That's impressive. Certainly impressive. Spiders are starting to trickle lower. Let's take a look at the Qs. Qs are remaining resilient here. Just basically down slightly. Spiders. IWM. I'm very concerned. This IWM price action is concerning me. It's made up of the small caps, the banks, which is the real breadth of this market. And then you just look at a handful of stocks like Apple and Nvidia, which Nvidia is now coming in. Look at this. I think Nvidia could come all the way back down to this 263.95 area, and it would still be positive on the session. And that Dixie is screaming higher. Dixie is pushing higher. Gold's under pressure. Bitcoin took a nice little dump. Just the one trade right now. Bank of America just turned negative. Carvana, GameStop are still positive, but definitely pulled off of the highs. AMD's positive, Nvidia's positive. Google's negative, but bounced off of the lows. Amazon's down 1. Schwab's down 3.4. Apple's still remaining strong. I still like Apple for a short. This is crazy that they're literally keeping up a handful of the mega caps. Really wild. So now AMD's also coming in sharper. Look at that drop on AMD. Nvidia should follow behind. Dixie's just made it almost a new high. If the Dixie can get above, I'm just looking here, above 103.26, so it's about 7 cents away, we could see this market have a bigger sell-off. But as of now, tech is still pushing up. Look at this push on Nvidia. Look at the Q's push. Apple's trying to make a new high. Tesla's bouncing. The Russell's bounced. The Spiders are bouncing. So they're not really worried about the dollar pushing higher as of yet. So definitely keep that on the radar. Coin had a nice bounce. Volatility is dropping substantially here. Natural gas has pulled off the highs. The Russell's bouncing. Bitcoin's had a bounce. Everything's bouncing. Everything is bouncing. So we're just waiting on Nvidia. I'm not really seeing anything else as of yet, but that could change. Let's take a look at some of these meme stocks again. Carvana, nice drop. GME, AMC. Let's take a look at AI. AI's pulled off the highs as well. The Russell's trying to retrace back to that trend line. Nvidia's trying to push up again as well. Indices are trying to fight back to the positive side. You have the 10-year yield just slightly positive, the 20-year yield slightly positive, the 30-year yield slightly positive, the 2-year yield's up 1.29%. Apple's seeing its first red candle of the day. Tesla's also under a little bit of pressure. Nvidia just made a new high. Wow, it's continuing to surge, so we will add to Nvidia again. This euphoria in the market, just like Nvidia specifically, it's just mind-blowing. Mind-blowing, I must admit. Wow, Nvidia's pushing up, so get ready to add to Nvidia, guys. 268.66 is the next level. Apple's pushing up. Markets are pushing up again. Qs are now green, testing the highs. Keep Nvidia on the radar. Meta's pushing up. Volatility's dropping. Dixie's still at the highs. It's almost there, about 14 cents away on Nvidia. 14 cents away. Alright guys, I just 268.65, I just got filled. 268.65. So that brings our average up to 267.91. $267.91. And the next ad level, if it continues to push, which would amaze me, but it can, which is why we just slowly accumulate. Slowly accumulate. 268.66, every dollar higher. That's what our game plan is right now. AMD just made a new high of day, so did Apple. Spiders are still seeing some weakness. Russell seeing another round of selling. So again, they're using the mega caps to really disguise the selling that is truly occurring beneath the hood of this market. They're using a handful of stocks that are holding up a huge weighting in market cap. And you think about the market cap in Nvidia, it's just blowing through to the upside. I mean, now it's up 2.6%, and AMD is pushing as well. Wow, look at the surge on Nvidia. Look at the spiders though. They are seeing some weakness. The Russell's seeing some weakness. So again, the market is being single-handedly held up by the Qs. And again, that market breadth, eventually, from my experience, they can pump these markets up in the short term just by a little bit, force people to cover, force people to chase. But that market breadth, in more scenarios than not, eventually takes hold of the market. So I'm just cautioning people. Apple still hasn't seen one red candle on the session. I'm still eyeing up that 160.50 level. The dollar's still getting some buy signals, trying to move a little bit higher. We're going to get an hourly close on the dollar, which I'm paying attention to very closely. Look at Nvidia, still trying to push up here. Mind-blowing. It is mind-blowing. AMD's also pushing up, so the semi space as a whole are really pushing to the upside here. But you're now approaching this double top on the SMH. You filled an intraday gap. There is resistance here. Nvidia's still outperforming. Get ready to add to Nvidia at 269.66. It's up over 2.64%. Spiders are still negative. Russell's still weak on the session. Really fascinating to watch this unfold. I think a lot of people are getting squeezed out of their Nvidia trade, and this is why we just accumulate slowly. Because these things go higher than most people think. Has it gone higher than I thought? Yeah, it has, to be honest. But as a good trader knows, you leave yourself maneuverability to basically accumulate in dollar cost average. And that way, if it does squeeze on you, you're not uncomfortable. You're not forced to make any rash decisions. You're not at the mercy of the markets. But it's life volume on the markets, which is why they're able to squeeze Nvidia up even more. And now it's coming in. And along with the spiders coming in, again, you get Nvidia and Apple to roll over, and those two stocks alone will put a great deal of pressure on the S&P. Look at Nvidia starting to roll now. Spiders are coming down. IWM. Apple's seeing its first red candle. So basically we're now flat on our Nvidia trade just like that. And will we see a 10-minute potential topping tail? It's kind of what I'm waiting for. But what do you know? Nvidia's trying to push back up. And likely that's just a small short covering. You know, people that pick the near-term high, precision traders, are likely just short covered for a small gain. But again, very few stocks are showing the relative strength that Apple and Nvidia are showing. Very few. Russell's catching a bounce, so is the Nasdaq, so are the spiders. Microsoft is still negative on the session. I like paying attention to Microsoft because it's certainly a stock that has been around many different bubbles, many different cycles. Gold is seeing some weakness. So gold is responding to the dollar. Go figure. But tech, markets, Nasdaq, nope. No way. Tech's invulnerable. Tech's invincible. Tech's invincible because Jim Cramer said it. So, Again, Kramer must be right. He's been right over the last couple days. That's for sure. Dollar's still trying to push up. Natural gas is under some pressure. Oil's still trying to hold some gains and bounce. First Solar's pushing up. JP Morgan's under a little bit of pressure right now, but the Russell's bouncing, so spiders are still trying to hold up on the positive side here, trying to push to the positive side at least. Apple's seeing that red candle come in, but Apple's still also up on the session, 0.28%. But the markets are very quiet as of now. And maybe we don't see Nvidia make a final move until the FOMC rate hike decision. Maybe we have to wait. The most volatility will come around that 2 p.m. We'll start to see volume pick up around 2 when we get the actual rate hike decision. And then the bigger volatility comes from the press conference. So definitely pay attention to that aspect of the market, because that volatility should increase substantially. And the Qs are on watch for a breakout today. They are on watch for a breakout. Okay. Nvidia just made a new high, pushing up. So the next add level on Nvidia will be at this next trend line, basically $1 higher. So it's been very, very easy to just gauge where we add next, and it is approaching that 269.66 level. Spiders are pushing up. Nvidia is still acting well, lifting this market single-handedly. Will Nvidia hit that $1 trillion market cap? We'll see. Natural gas is under pressure right now. It is testing the lows. That's not what you want to see. But there's still an hourly bottoming tail that it's holding. Bullish engulfing. But you are seeing nat gas under pressure. Nvidia is seeing some little bit of minor distribution here. The dollar's still trying to fight to the positive side. It's almost positive. Tesla's seeing a little bit more selling, so is Apple. Caterpillar's coming down, so industrials are under a little bit of minor pressure this morning. Coinbase is seeing some distribution. The Qs are now seeing more sell side pressure, so that should help. Dollar just made a new high. It's pushing up. Apple's seeing more distribution here. Nvidia might have a potential 10-minute time. There's still at 7 minutes, a lot of time, so a lot of time. But Nvidia hasn't had one red candle yet. Apple's now onto its second. Tesla's had a couple. So the semis are still holding up well. That's likely because of that CHIPS Act, the bill. Maybe the semis have to get to the double top zone here. But again, that's not a small rally off of the lows that, especially when you look at Nvidia. I mean, Nvidia is just outlandishly overbought in every metric. Technically, fundamentally, look at this dollar surge. Look at this move. Brand new high. We take out these pivots over here around the 103.25.26 level and the market should react. But as of now, Nvidia is pushing up. Get ready to add to Nvidia. All right, I just got filled 269.72. 269.72. Basically, it brings our average up to this 268.60 level. 268.60. Up over 2.9%. Jeez. Crazy. Apple's seeing some distribution. Apple maybe have an hourly topping tail. They're still too early though in the candle. Still got 27 minutes till that happens. So we have a 4-6 position short in Nvidia. And Nvidia, new high. New high. It's diverging from the Qs. It's diverging from the spiders. IWM's pushing up. Apple's seeing weakness. So Apple's starting to come in. And the volume's actually fairly light, which is probably why Nvidia's pushing up so much. Market makers can squeeze stocks higher based off of light volume trends, which the volume is pretty light right now in the market. That'll pick up later on in the session, but as of now, it's very, very light. Nat gas is bouncing, that's good to see. Defending that hourly reversal. So basically the level we don't want to lose are these pivots over here. You can see it clear on an hourly chart. This is your bullish engulfing on the hourly chart, and it is currently being defended. Look at that move on Nvidia. Impressive. Very much impressive. Maybe a 10-minute topping tail on Nvidia. This is what we want to see. Apple's dumping. Tesla is testing the lows. So look at Apple, AAPL. Apple's falling now. It's almost losing its positive gain. So this should drag on Nvidia. But as of now, markets are acting resilient. And it's just a handful of names. Let's take a look at Microsoft. Microsoft's bounced, but it's still negative. Let's take a look at Google. Google's basically just slightly negative. Let's take a look at that meta chart because that one's squeezed up. Reversal, and now it's retesting and retracing that topping tail. And Nvidia back to the highs. Jesus. Relentless. Maybe this is AI trading against everybody that's short. Kicking everybody's butt. For now. For now. Dollar's popping, made a new high. The Dixie's moving up nicely. Coin is rolling over some more now. Bitcoin, even though Bitcoin is, the Qs are seeing weakness. Still that 10-minute topping tail may be forming on Nvidia. Apple's breaking the short-term moving average right now. You got 2 minutes and 56 seconds to close below the intraday 7. So will we see more weakness creep into this market? That's what I'm watching. The bank stocks have caught a nice bounce. Like FRC has traded substantially off the lows. That's a terrific bounce on FRC. Oh, and what do you know? Nvidia is back to the highs. Qs are still holding on to positive gains. SMH still at the highs. So maybe it needs to get to this double top. Excuse me. Apple's still selling. Apple's selling off here. So as of now, Apple does have an hourly topping tail, but It's still early in the session. Still early in the session. China stocks are bouncing nicely. Spiders are catching a bid here. AMD's pushing up. The dollar's softening a little bit here. So that's why the markets are bouncing. The dollar is softening. Spiders are near the highs. Nvidia is pushing for a new high. QQQ still seeing some distribution. Gold's under a little pressure. Apple's under a little bit of pressure. So I find it interesting that Apple's seeing the weakness now, but Nvidia has not participated in the recent little decline. 2-year yields at 4.25, still trying to push up. Spiders are now coming in. Apple's seeing a harder sell. Look at this dump on Apple. Apple's gone negative now. That's going to weigh on the S&P and the Qs, but you're still seeing the semis insulate this market right now. Semis are insulating this market. Yields are slowly starting to creep up. Gold is still holding some gains. Let's take a look at GDX. I know there's been a lot of buying pressure in that. Nothing really to do there. Look at that surge on Nvidia. That's crazy. Apple's now catching a bounce, but it did have a 10-minute close below the key short-term moving average. You often will see a retrace. The upsloping wedge pattern on Nvidia is just remarkably steep. It is one of the steepest upsloping wedge patterns I've seen in a while. And again, upsloping wedges do favor a break lower, but as of now, Nvidia is not seeing that. Nvidia is still pushing. So Nvidia is still acting very resilient as of now. Apple's still under a little bit of pressure. Apple is basically still on the negative side, but realistically it's flat, more so on the flat side. Starting to see another round of selling occur. Volatility is increasing. Meta's softening, AMD's softening, Tesla's coming down, Nvidia's now starting to come down. The dollar's trying to push back up. Qs are breaking the short-term moving average. They haven't closed below. The Russell's now seeing a little bit of selling, so the indices are seeing some minor selling occurring. Let's look at these banks. KBE Bank, that's coming down. We'll take a look at JP Morgan. That one's actually negative. Look at this bear flag. This breaks. This is telling us that there's a lot of downside, and I still think we come back down to fill that gap. Let's take a look at the regionals. KRE. Let's take a look at some of these. WAL. Seeing some selling. FRC. Coming down a little bit. Zion is another one. And then we'll take a look at some of the big regionals that I believe are at risk. So Wells Fargo's just slightly negative. Citi is slightly positive. That's the one that I'm keeping a close eye on. Bank of America, Warren Buffett, I'm keeping a close eye on as well. Spiders are now coming in. Look at the Qs. They're at the lows of the session. Sorry, my forgiveness. The lows of the session was down here. They're not at the lows. Nvidia is starting to come down a little bit now as well. Whoops, that's not Nvidia. So we're almost in the money on our Nvidia trade, just like that. But you know what? A stock like this, although it's been so strong, I think we're going to see some harder downside ahead. Natural gas is still defending that hourly bottoming tail, which is healthy to see. I do like that aspect. Tesla's breaking the low. Tesla's almost at the low of the session. It's testing that low, and it is making a new low. It did make a new intraday low. It hasn't closed, but Tesla's under a little bit of pressure here this morning. Let's take a look at that SMH. SMH has had a nice little rollover. Let me check the 15-minute chart on the SMH. Look at that. Look at this double top. Boom, boom. Potential 15-minute topping tail. We'll see in 14 seconds. This is good. This is what we want to see holding a big Nvidia short now. And this is a 4-6 position, so it's a fairly nice size in my account. Fairly nice size, which I'm happy to hold lower, because just based off of, even I'm not much of a fundamental, but I do pay attention to it. But this PE in this type of market is not sustainable. And you did get a topping tail on Nvidia as well. It's a 15-minute one. And we are in the money just like that. Never mind, we're out of the money. Oh, Nvidia. Funny price action in these stocks, man. Really wild. Spiders are catching a small little bounce intraday. Nvidia's caught a bounce. Volume's still exceptionally light. Natural gas is still negative on the session. Oil has now rolled over as well. It's gone negative. So you're seeing some of the energy stocks not respond well to that. PDD, gold is actually making a brief new intraday. It's trying to make a new intraday high. Nvidia is pushing right back up, so is Apple. Microsoft's turned to the positive side. So this market is now being lifted by the next large mega caps. Look at Carvana. Carvana's basically been an exit liquidity scheme. I think this one could easily go negative. GME, I believe, exit liquidity scheme. Putting in bearish consolidation. Lots of volume. Look at the size of this volume on this small candle body. That's a little bit of a red flag. Spiders are pushing up, which is helping this whole market. I still think that there's a lot of weakness in some of the real estate. Home builders haven't really been responding, although they are down. But if you look at the real estate sector, I mean, the IYR is down substantially. So take a look at this chart. This is not looking healthy. This chart is not looking healthy. IYR real estate, and then if you look at the XLRE, which is what we cover in our sector analysis, look at this. Basically, you hit support, and you're losing that support trend line. And I actually have to adjust that to over there, and you can see You're losing massive support zones on the real estate sector side. Nvidia is still holding up. SPY is still pushing. Qs are pushing up. Bitcoin's pushing up. The dollar's taking a breather. Let's flip back to the spiders here. Let's flip back to the Qs. Qs are also pushing up. Nvidia. So markets are just very slow right now. And often what happens with these little tail candles, and notice how the semis haven't had as big of a bounce. So often with these tail candles you get a retrace. I think we're seeing that on Nvidia. You're getting a retrace of the topping tail, but it should come in. It should come in. Spiders are still pushing up. Qs are still pushing up. Bitcoin's also trying to push up. Gold is also pushing up, so that's telling us that the dollar's softening, but the dollar's putting in bullish intraday. Bullish intraday. Spiders are still acting well. There comes Nvidia. That's just the move on Nvidia is really one for the ages. Nike's still under pressure, but it is off the lows. Healthcare stocks are catching a small bid. Likes of Walmart is just slightly positive. Natural gas is now coming down again. Apple's still remaining slightly positive. Microsoft's having a big push, which is now the next round of mega caps rotating money into Microsoft, likely out of Apple. Spiders are also trying to charge back to the positive side. Long end yields have softened. 30 yield actually went negative. Volatility crush is happening severely. Spiders are still pushing up. Qs are charging for the high of the day. So look at this Q push. Qs just are trying to break out to the upside here. Qs are trying to break out to the upside. On watch for a technical breakout, but it hasn't broken out yet. You know, a lot of these market makers are very good at getting people to chase, getting people to FOMO. Coin is pushing up. The VIX is falling. Nvidia is seeing some distribution. AMD's under a little bit of pressure. Spiders are still acting well, so are the Qs. Let's look back to the Nvidia chart. Nvidia is seeing some distribution occurring there. We'll see what the semis do here. Semis are also important to follow. The dollar's still putting in bullish consolidation, but it hasn't closed above this wide range red bar that I'm watching on the dollar. We really need to see the dollar push higher through this wide range red bar, but as of now, it's not doing that. Meta may be forming an hourly topping tail. It's too early to tell. There's still about 7 minutes in the candle. Meta is interesting. It's had 1, 2, 3, 4, 5, 6, 7 hours of straight upside. 7 hours of straight upside, really matching kind of the performance of the Qs. That's for sure. The Qs on the hourly chart has had 1, 2, 3, 4, 5, 6, 7 hours of continuous upside as well. So no doubt in my mind they're extended, they're overbought, but it doesn't mean it can't push higher. Spiders are still acting very well, and so are the Qs. The Qs are again pushing up here. Look at this Q level. So the big level we have to watch is this pivot over here. This is going to be your technical breakout pivot. But basically you need to see it on a daily chart. All this little intraday action is very, very skewed and manipulative in the short term. And the Qs are pushing up to a very, very big resistance level, a trend line of resistance. So even though the Qs are pushing up, Nvidia still hasn't pushed up and made a new high with the Qs. So I find that interesting. The Qs have made a new high, but when you look at Nvidia, it hasn't taken out the high. Obviously it's up substantially more, but even when you look at Apple, Apple hasn't made a new high as well. So at least we know there's now some potential relative weakness despite the Qs pushing higher. So now Nvidia is coming in. We're basically now in the money on our Nvidia trade. But I want more. I want a lot more out of this trade. We have a 4-6 position. In today's stream, what the game plan is, we're going to be going a little bit of a marathon stream. We're not going to stay on the session. We're going to keep the stream going all day. With that being said, we will be covering the live Powell press conference, the interest rate hike, the market action as we get closer to the time frame. We'll keep the stream going, but I won't be on the mic all day. I'll probably get off the mic around 10:30, maybe 11, just basically to see what this market action does. But look at this Nvidia fall now. We get any weakness in the Qs, we should be in the money. But yeah, we'll keep the stream going, and I'll jump on the mic if there's any crazy action or if I do anything. But we will be covering the live footage of the Powell and FOMC press conference. Spiders are still trying to push up. Qs are at the highs. Let's take a look at the Qs. They're still pushing up. Spiders are still pushing up as well, along with the Qs. So definitely the markets are acting resilient. No real fear yet. Maybe this is just light volume manipulation. Get people in, but the more we rally, the more confident I become in a sell-off into the Fed or into Jay Powell. Dollar has softened quite substantially here, which is why these markets are just floating up. Look at this dollar softening. Now you are into this next consolidation support range. And basically the level I'm watching is, this is a key trend line, and then you also have this upsloping trend line. But the dollar's coming down, and that's also because the rates have softened. So the spiders are pushing up, Qs are at the highs of the session. Microsoft's definitely doing a lot of heavy lifting right now. Look at that surge on Microsoft. It was negative, now it's pushing up quite nicely. So the second largest company is pushing the Qs up single-handedly. Even with the Qs floating up tremendously, Nvidia still has not made a bigger move to the upside yet, but obviously it is showing good relative strength. On the 30-minute Nvidia chart, which closes in roughly a couple minutes, we have a potential 30-minute tail, 30-minute reversal signal. We'll watch this 30-minute chart. I find that intriguing. Qs are at the highs of the session, still pushing. Qs are still pushing. Apple's pushing for the high as well. So now you have Microsoft and Apple both running together, which is what's going to lift this market. Just those two market mega caps alone can basically lift this market out of much turmoil. Just those two companies. Massive. Q's new high. Hitting a massive resistance parallel channel right now. You could take a QQQ short. Look at that push on the Qs. Wow. Look at this move on the Qs. Ripping. People are buying this technical breakout here. Chasing on the daily chart. You'll see that we are watching it for a technical breakout. But people are chasing it for sure. Massive volume on that candle. Massive volume. Spiders breaking out. Qs are breaking out. No topping tail on Nvidia. Apple new high. Markets are ripping. Do you think this is what Powell wants to see? Well, we'll find out. Nat gas is coming down. Massive surge on the Qs. Huge volume coming in on the Qs there. That's a magnificent amount of volume. Jeez. Apple's testing the highs. Nvidia's pushing back up to the highs. Bitcoin's pushing up. But you are at some decent resistance right now on the Qs. And you are extended in every metric. The daily and the intraday. So even with that big push on the Qs making a great substantial high, Nvidia still didn't take out the high. Not saying it can't, but it's impressive to see that Nvidia didn't make a new high despite that massive surge in the Qs. I mean, we're talking about a 310 all the way up to 311, over a dollar move on the Qs, and Nvidia didn't push up. So, but markets are acting very well right now. Still seeing Meta push up. Apple's pushing up. The Qs have basically now, I think, approaching 8 hours of continuous upside. Bitcoin's pushing up. Let's just show you this hourly chart on the Qs. This is overbought. I mean, you're approaching this double top zone. Definitely overbought. Could we see a market squeeze higher today? Absolutely, we could. Dollar has softened substantially. You did get a positive hourly close on the spiders. The VIX is slowly starting to creep back up as well, even as the Dixie and the markets push up. Let's take a look at the Russell again. How's JP Morgan doing? So JP Morgan, even with the push on the spiders, still putting in bearish consolidation. That's not what we want to see as if you're bullish on the bank. Again, I still think there's a lot of risk in the banking sector that's just coming to fruition. Natural gas is starting to push. That's good to see. Hopefully natural gas can still defend this level and get its butt back up there. SMH still didn't take out the highs even with that big NASDAQ push. So the dollar has softened quite substantially again. Dollar still softening. Apple's at the high of the day. Nvidia just made a new high. So again, approaching the next ad level on Nvidia here. 270.67, 270.67. So get ready to add to Nvidia. It's almost at that next level. Spiders are coming down. Still just off of that level. The VIX is slowly creeping up. Apple's at the high of the session. Microsoft's seeing a little bit of distribution. Alright guys, there it is, added 270.76, 270.76. That's a 5-6 position on Nvidia. I'll let you know my average here. Brings it up to this 269.52, 269.52. Dollar's catching a small bounce. Bitcoin's seeing a nice reversal off of a double top zone. It briefly pierced that high of 28,475 and it's now seeing resistance off of that level. VIX is starting to creep up but just a tiny bit. Tesla's seeing some distribution and AMD is coming down. That's a nice little pullback there. Look at that. And we're now in the money on the trade. We'll see if we get a 15-minute tail candle. I'm watching for a 10-minute tail candle on my other screens here. And I'm still eyeing up Apple for a short at that 160.51. I mean, there is a chance it could push to 163. But this would be more of a swing trade level. Markets are still acting well. The dollar's popping. Spiders are coming in a little bit now. So are the Qs. A nice little hard seller on the Qs. Still acting well. Spiders also coming down slightly. And if you really think about it from a market standpoint, the spiders are only up 0.14%. The Qs are only up 0.32%. But Nvidia, I don't even know what the market cap is. I think it's probably close to 700 billion. Nvidia up over 3.16%. Apple up over 0.5%. Microsoft up over 1%. So just single-handedly, those mega cap behemoths are propping this market up, but the spiders with that amount of move to the upside in these behemoth names should really be up more. But again, to re-emphasize, it's telling us that the market breadth in this market is weak. The majority of the stocks are not performing like these mega caps, and these mega cap valuations are just getting obscenely overvalued. All right, so because it's 10:30 time frame and these markets are kind of just docile, floating around, not really doing too much too crazy. Basically, my expectation is we still have another ad level on Nvidia around the 271.66 level, which I would continue to add at. And honestly, that would be a full position, but if for some reason that Nvidia was to push through that, then I would continue to add at the 273 level. That would be the next ad level, and I would actually open up my position a little bit heavier. And I would do a, instead of a full position of 6.6, I would do a 7.6 of a position. So it would just do another little bit of an extra dollar cost average on the position. But I am comfortable holding Nvidia even overnight. Even if this pops, I know this will come down eventually. It hasn't had a meaningful pullback with the market. And but as of now, Nvidia is up over 3%. My expectation on the trade, if for some reason it flushes down before the Fed meeting and we can get a level around 1% gain at $2.88, I would likely take that off the table. Now, do I think Nvidia can come all the way down here and fill the gap, 262, go negative? Yes, I do. And there's a big technical level of this previous pivot high, which even that is a likely scenario that it could flush down to. So my next two ad levels will be 271.67, basically a dollar higher, and then 273. And I'm looking for basically a $2 to $3 move on Nvidia for a cover. So really that's the expectations for that trade. We are seeing Bitcoin get rejected at that double top, so that makes me a little bit more optimistic that we will see further downside in the Qs and so on and so forth. But as of now, the markets are acting resiliently well, and we'll just have to respect that price action. And we will see you on the charts for the big FOMC meeting. And if anything crazy comes on, I'm going to be here. I'm just going to be off the mic, off the camera for a little bit, just as we discuss some of the potential strategies as we head into the FOMC meeting. So stay tuned. I will probably come back on the mic about 15 to 20 minutes before the actual interest rate decision, which is at 2. And then we will take you in from about 145, 140 all the way down to the 2 o'clock interest rate decision and the Powell press conference, which we will be live streaming on our channel. So definitely tune in for that because it should be fireworks. I mean, if you really think about when last a Fed chair has had to be questioned about bank failures, it was in 2008, 2007-08. So this should be one for the record books, in my opinion. On that note, just like that, we're basically flat on our Nvidia trade. Again, even if this was to go higher, I'm comfortable holding it as a swing. I already do, and we'll just see what happens. So on that note, I'm going to bid you farewell, and we'll just see what this market has in store later on. Take care, everybody. We'll see you on the charts in a few hours. guys, so we're seeing the spiders break down here quickly, and basically what I'm watching for is a little bit of a technical breakdown. Let me just pull up the S&P 500 here. Overall, you can see we had a beautiful technical breakdown. We are looking to confirm on a 5-minute chart. I'm going to be looking for 10-minute, but so far this breakdown is not healthy. You can see you almost have this little, almost this M-top pattern, which actually takes you down, if you confirm, takes you down to 397 all the way down here. So we're going to have to wait and see how this candle closes. I am watching the 10-minute chart as well to see if we get that technical breakdown confirmation. But so far, there is a little bit of sell side pressure that is coming in to this market, but nothing too crazy as of yet. Hey guys, we're seeing Nvidia push up here. So I just want to let you know I will add to my Nvidia short if it keeps pushing up. 271.66, it's diverging from the markets, pumping up higher. Banks are showing tremendous amount of weakness. So Nvidia just made a new high on the session, pushing up the Qs, but you're seeing really a lot of weakness occur in the IWM, the KRE. This is systemic risk that's going on. Even look at JP Morgan, JPM. So lots of weakness in the banks. And again, that's not a healthy sign for this market when the banks are showing exceptional weakness. I mean, and that's across the board. It's not just regionals. It's the big boys too. Goldman Sachs, Citigroup. Citigroup's just made a new low. Bank of America about to take out the low. JPM made a brief new low there. So again, we might be seeing money rotate back out of the banks and into tech, but just making these tech names that much more overbought. And I still remain skeptical. If there's bank weakness and contagion systemic risk, I mean, it will drag this market down eventually. But you're seeing the KRE now down 1.54% and trickling lower. Notice how you broke this trend line over here. That's not good for the market. Certainly not good. Gold obviously had that little pop to the upside, but it's now starting to fade under the dollar rising. Let's just continue to watch things. The spiders did also break this trend line over here. So we'll see if it can recapture it or grind higher. But the dollar's pushing up. And again, as long as the Russell, that breadth in the market, remains exceptionally weak, we should head lower. And basically Nvidia, that was a brief pop there on Nvidia. Let's take a look at this SMH. SMH still positive on the session. Tesla's acting extremely weak, putting in this bearish inside bar consolidation, likely going to break lower. Basically the big level I'm watching now is this level over here. If you break that level, then you'll have your next bigger support in and around here. And then if you break that level, then it could be a lot more downside. So Hey guys, just a heads up on Nvidia. I'm about to add here. It is approaching that next add level. So keep a close eye on that 271.66. Up over 3.58%. It's just in a league of its own right now. Nvidia is soaring and roaring. Apple made a brief new high. Q's did make a new high, but what I'm still witnessing is massive contagion occurring and starting to creep into these banking stocks. I mean, something is still lurking in this market. Something is still lurking in this market. You know, Bank of America falling, Citi making new lows, Wells Fargo. Like, these banks are not healthy. Once again, the famous gap up and looking like they're trying to crack. So this is not healthy for the Russell, the S&P 500, or tech. I mean, tech is a little more insulated from this, but you're starting to notice massive weakness in this banking sector. So definitely something is still lurking in this market. And this crazy euphoric rally in tech, I think, is going to get slaughtered eventually. I really do. I mean, this weakness in this banking sector is not over. Something is still lurking. UBS, let's take a look at Credit Suisse, CS. That has had a bounce, but again, I'm not liking what I'm seeing in the banking. Look at XLF. And again, look at this Russell coming in sharply now. And why? It's all the banking stocks. Something is going on in banking. And maybe the banks know that Powell's set to raise rates again. And that's why they're seeing more and more liquidity outflowing. It's interesting. It's going to be an interesting press conference from Powell. But these banks are not responding in kind. And again, tech is still seeing that money flow distribution because oftentimes, even though investors and traders and hedge funds have to sell, and these are institutions have to sell bank stocks, this liquidity has to flow somewhere. But if there's risk in the system with banks, it's not a good thing. And the yields are softening again, which might be a little bit of an indication that something is lurking in the banks. So Nvidia is still trying to push up. Alright guys, Nvidia is approaching here, so it's about 8 cents away from the level. It's about 8 cents away from the level. $7 away. Dollars creeping up. SPY's creeping up. Rates have softened. The dollar's starting to catch a bigger bid. I'm going to pick up some more Nvidia here at 271.50. 271.50. Just got filled at 271.53. Alright, it's hitting that next ad level there. It's at 61. So my new average now is all the way up to here, 270.27. 270.27, and Nvidia is piercing that level now. So Nvidia is at the high of the day, just continuing to outperform. Dollars creeping up. We're still seeing bank weakness. JP Morgan, KBE, KRE, IWM. Lots of weakness. The dollar's trying to fight back to the positive side. Qs are still pushing for the high of the day, not responding to a stronger dollar. So it's a nice little sell candle off of that level on Nvidia, and the volume actually is picking up, which is interesting to see. You're still seeing weakness in the banks. You're seeing weakness in basically some of the commercial real estate. Real estate is getting slaughtered today. Tesla's putting in bearish consolidation on the 10-minute intraday chart. So if we look at Tesla, this is all inside bar bearish consolidation. Let's let this chart load, and if we lose this key upsloping trend line, Tesla will be in some trouble. But as of now, market makers are holding it steady, but everything is inside of this wide range red bar. SMH is still acting well. So that turned out to be a pretty good ad on Nvidia as of now, but Nvidia still hasn't really seen much sell side pressure. It's acting very resilient. Nice to see natural gas starting to perk back up to the upside. Still negative on the session, but it's definitely coming off of the lows. And this actually may be a potential long trade. I mean, basically what you want to see is if we can get a close above this downsloping trend line, and that gas could be poised. This is still bullish consolidation off of your initial bullish engulfing candle earlier on in the session. And you've just been slowly working out the sellers. And if this gets primed and ready, we could actually play it long again, but we hold a nice position. Look at the big sell side pressure coming in Nvidia now. So it's much, much better price action as of late. We are getting more sell side pressure. So we'll continue to watch this stock. It's a powerhouse market leader, but it is coming in sharper now. That's good to see. That is really good to see. So now banks are bouncing, but tech is seeing some sell side. So you did get a 10-minute topping tail on Nvidia there. We'll see if it can match the 20-minute. Alright, I'm going to go silent on the mic again, guys. I'm just going to go grab some lunch. I will still be watching, managing. If anything crazy happens, I will hop back on. Apple pulled off the highs. Nvidia pulled off the highs. Volume is very light right now, so markets could float up. But again, we still broke a key level on the S&P, which was this upsloping trend line. And now what I'm watching for is, do we get a continuation move to the downside with a break of this key trend line? Alright, on that note, I'm going to go grab some lunch. I encourage everyone to do so because we should see some more wild action later on this afternoon. Alright guys, so we're just seeing this market slowly start to fade and turn. The Qs just went negative. Nvidia's rolling nicely, so we are in the money. I'm still looking for more, so I'm comfortable holding this lower because we are seeing yields trying to catch a bid as well as the dollar. And yeah, I definitely think there's more downside just with due to the extended state of Nvidia, the extended state of the Qs, the S&P. So I'm holding for more. I'm holding for more. We'll keep you posted. Hey guys, so I just want to show you what I'm seeing here on the S&P 500. We've actually triggered a little bit of a head and shoulders. It's a sloppy one, but it still counts, being the fact that you have a neckline break over here, and this pattern actually takes you down intraday to about 396.80. So definitely keep that 396.80 level on the radar, because that's where this little intraday bearish pattern takes you. So I'll put that in there. But basically, this little head and shoulders trigger, break, confirm takes you down to 396.80. Now we could get a retrace. If you get a retrace and close back above that neckline, then it's negated. Okay, so we'll keep the S&P on the radar. Actually, so just watch that 396.80 level. Definitely watch that 396.80 level. Nvidia, we're in the money. This was likely some short covering, but I do anticipate it to go lower. I'm holding longer. Yields are softening. Oil's caught a nice bounce. Just trying to see anything else that we need to be aware of. Bitcoin's still consolidating. Technically bullishly. Natural gas has been under pressure all day, but it's still fighting that low. And what I'm seeing on natural gas is basically you are still making a series of higher lows. So here was your low, here was your second higher low, here's your third higher low, here's your fourth higher low, here's potentially your fifth higher low. So that's still technically, even though it's down, natural gas is still trying to fight the sell side pressure. And Nvidia is now bouncing. Spiders are bouncing, yields have softened. Alright, I'll keep you posted if I see anything else. Hey guys, just a quick update that I'm going to be looking to potentially cover my Nvidia short if it coincides with the SPY level. If we get there before the Fed meeting, obviously Fed meeting's in about an hour, just less than an hour. The interest rate hike is in less than an hour. So I think what we're seeing is people slowly taking profits, paring back on the risk due to the overextension in this market. But I may look to just reduce some of my Nvidia exposure. How we can play it a couple ways. You can cover your full position, or we're deep in the money right now, or you can cover half and then leave some running. I might leave a little bit running, but I am swing short this with my members, so I do have exposure to the downside if it continues to fall. So just continue to be aware of the price action. I might jump on the market, but this target down here around 396.80 is very key for the S&P.
economic and community development.
The Fed also promotes stability in the financial system, because instability in the financial system can pose a severe threat to the broader economy and to communities across the nation.
The Fed also acts as a bank to other banks by clearing checks, making electronic payments, and providing the currency that Americans need and use every day.
Our nation's economy and financial system face constant challenges.
The Fed is working every day to address those challenges and is committed to helping foster good economic conditions and outcomes. Employment opportunities, stable prices, and financial stability that benefit all Americans.
And we are also the Fed.
To learn more about the Federal Reserve, you'll find a wide range of resources on the Board of Governors website at federalreserve.gov.
Hey everybody, welcome back to the second half live stream of the FOMC meeting and rate hike. So we have about 14 minutes till the FOMC rate hike. You can see on the S&P 500 it has rallied off of the lows. Right now we obviously are holding an Nvidia short. That's one of our bigger, larger positions. But we're just going to see what happens here. I mean, basically the market consensus is 0.25% hike. That's across more of the medium banks. And then you look at the bond market, they're actually signaling a cut of roughly 50 bips. And then when you look at what the Bank of Canada did, they paused. But you look at the ECB, they raised by 50 bips. So it's, I mean, it could go either way. I find it difficult that Powell's not going to raise, especially since inflation CPI, the last report, he is basing it off of his 6%, well above the 2% target. Yes, banking inflation has come, but we have to remember he swore in Congress, two-day testimony at Congress, that he needs to raise unemployment. And I think he's firm on that. That was under oath. And then secondly, another powerful line that he has said that they would rather overdo it because they have the tools such as QE, these deposit windows, lowering rates to try to pick up the markets and pick up the economy if they went too far. So again, from my perspective, have they gone too far yet? I don't think so, based off of what equities are doing. Certainly not, in my opinion, they haven't gone too far yet. Now, obviously, the interest rates do have a lag effect, so whether or not we're prematurely saying that, that could also be a possibility. Right now, Bitcoin has pulled off of the highs substantially. So take a look at Bitcoin's chart here. Bitcoin's interesting to see Bitcoin almost going negative. Let's do a quick check on gold. Gold's slightly positive, really just consolidating. But we'll keep NVIDIA on the radar here because it is the market leader. And NVIDIA could be putting in this head and shoulders formation, which target takes you down to 265 here. So that would be that would imply a pretty big downside move. The VIX is slipping, natural gas is under pressure, oil is holding up. So we're going to see two rounds of volatility. One at 2 o'clock. When we get the actual rate hike, because there's a lot of people and funds that are positioned for cuts. There's some that are positioned for 50. There's some that are positioned for pause. So you will get an initial spike in volatility based off of the decision. I've given my members my buy orders for swing trades. I actually have a lot of them just queued up and ready to go, just in case we get a pop and a drop, or vice versa, drop and pop. But we'll see what happens. And interesting enough, into the meeting, over the last 5 hours, the 2-year yield has softened substantially. And same with the long end rates. They've all turned negative. So the 10-year is negative by 1.77, the 20 is negative by 1.35, and the 30 is negative by 1.5. And then what I'm also watching is weakness in banks. Banks are bouncing now, but they have been tremendously weak, even though the markets are kind of just flattish. So the IWM, that's obviously seeing weakness. Even big banks, I mean, it's not just a regional banking thing. JPM underperforming. Bank of America significantly underperforming. Citigroup underperforming. What else do we have? So lots and lots of bank stocks underperforming. Right now the spiders are bouncing. We have about 10 minutes exactly, and you are seeing the volume slowly upticking. Even on NVIDIA, you have some increasing in volume trends. Spiders are still trying to push up, and they could be retracing to the neckline of the breakdown pattern. Banks are catching a bounce, crypto's under pressure. Nine minutes till showtime. Natural gas is under significant pressure today. It's not healthy price action what it's doing. Now there is one little positive that you are inside of the original breakout wide range green bar, but you really don't want to lose on the hourly close, the 229.3 level. So I'll show you what I'm watching. Whoops. Basically, nat gas has been under pressure all day. Did put in a reversal, so that's still technically intact, but as soon as 8-minute candle closes here, then it's not. But you don't want to see this wide range green bar lost on nat gas. We really need to hold this on an hourly close. And then everything is still technically bullish, even though it's down quite substantially on the session. NVIDIA did put in that hourly topping signal quite a while ago, so you're doing naturally a big retrace of that pattern. So the 2-year yield, the dollar's softening. Spiders are still pushing up. So basically the Qs, the spiders have all caught a bid off of the lows. They were looking very, very vulnerable, but they've caught a nice bid, and spiders are almost back to the positive side. Qs are positive. Russell's still the lagger, weak on the session. And all the yields are rolling over. The 2-year yield is negative. All yields have gone negative. Dollar's also negative. Dollar's had 5 days of negative price action. So we're about 7 minutes to showtime. The algos will make the move first. We wait for patterns. Nvidia's pushing up, Apple's pushing up, spiders are pushing up as well. Potentially retracing to the neckline. Bitcoin's catching a bid. Everything's catching a bid right now before the meeting or before the rate hike. Bloomberg had a professor on. He clearly said they should raise by at least 25 bips. I agree. VIX has softened quite substantially. Meta's pushed back up to the highs. AMD's at the highs. Tesla's just off the lows. Nvidia is pushing up some more now. It's interesting to see rates collapsing on both the short and the long term end. And what's the weakest sector? One of the most sectors vulnerable to rates rising is real estate. So XLRE is giving us some insights here. It's down substantially. Even though rates have been falling recent sessions, look at the decimation in real estate. I mean, just trickling lower as rates fall. So that is not a healthy thing to see, considering that rates have fallen, and usually this sector gets a terrific bid when rates do fall. But we're seeing now that counter correlation working against it. Spiders are trying to push up still, right into the rate hike. Will Powell shock the market? Certainly a lot of money has front run the bond market. If Powell came out with a 50, I mean, you would see this market drop and you would have a lot of pain in the bond market. That max pain move would be in the bond market because there's so much front running that's been going on, and in tech. So now spiders have retraced to the breakdown zone at 398.72. This is a big level and it's trying to push through. We have 3 minutes to showtime. Buckle up. This one's a very anticipated one because the Nasdaq's on verge of a breakout. Russell's still weak. Nat gas is still under immense pressure. Wow, Nike's now down 3.6%. That's pretty wild. Consumer discretionary getting hammered. Getting hammered. Spiders are just pulling off that resistance. Volume's starting to pick up. We have about a minute and 36 seconds left. Minute and 36 seconds. Bitcoin's had a massive move off the lows. So Bitcoin has had a phenomenal bounce off of the lows. But lots of volatility starting to creep in. Volume starting to pick up in these markets. VIX is starting to creep up. Meta's at the highs. Apple's just off the highs. Coins catching a bounce with Bitcoin. Gold is coming in sharper now. Gold is falling and seeing some weakness. The dollar's starting to creep up. The dollar is starting to creep up. The big thing will be that dollar and rates. Really nothing else matters. Because if the dollar shoots up on a higher rate, 43 seconds. Nvidia is still acting well. Spiders are pushing up. Spiders are pushing up here. Meta just made a new intraday high. Filled a phenomenal gap. 17 seconds. Volume starting to increase. Just going to get my coffee out of my way here. Be able to work my mouse. Gold softened. 2-year yield's perking up. Alright, 2-year yield just had a little green tick. Oh, spiders are pushing. Oh, dollar's dropping. Dollar had a big drop. Big drop on the dollar. 25 bit raise. Dollar's falling sharply. Gold's shooting up. Bitcoin's shooting up. It's 5%. It's a 25 bip raise. Markets are shooting up here. Markets are shooting up. We'll see if this is the right move or the wrong move. Markets are having a massive pop to the upside. Massive pop. Volatility's falling. Spiders are ramping higher. Look at Nvidia go. Wow. What a surge on Nvidia, on Apple. Dollar is tanking. Yields are tanking. We'll see if this is the first move, is the wrong one usually. But Powell's seeing this and we'll see if he likes it. Just watch out though, because there's lots of fireworks that could occur. They say the first move is the wrong one, but so far yields have collapsed. Even though the Fed took their fund up to 5%, the 2-year yield dropped to 4. It's a 100 bip discrepancy and divergence. Markets, we'll see. And typically, right now the 2-year yield is tanking. Gold is shooting up. Qs have rallied. Coins up. Bitcoin's seeing a hard reversal coming in here. Bitcoin's seeing a hard reversal. Crypto's seeing a hard reversal. The 2-year yield is collapsing along with the dollar. Markets are coming back in now though. The spiders are still up substantially along with the Qs. We'll see if they start coming in though. Gold's pushing up, obviously on the falling yields. It's very ironic that the 2-year yield is collapsing, even though the Fed raised. Bond market's still not believing the Fed. So now I think what's going to happen is you're going to see Powell's tone change, because the 2-year yield, the bond market, is now pricing in a 100 bip difference. And the statement is still being read by the algos. There's a lot of whipsaw. There's a lot of initial moves. 2-year yield's trying to bounce. The dollar's still very, very weak. Very weak. But again, just be careful. If this bond market doesn't take Powell at his word, he will come out with a vengeance. Nvidia's seeing a big reversal now. Will the first move be the wrong move? Volatility is increasing. Bitcoin's seeing more sell side pressure. Qs are potentially have an hourly topping tail forming now. Still 27 minutes in the candle. Lots of volatility. Tons and tons of volatility here. Still a 100 bip discrepancy between the bond market and Powell. And I don't think he's going to like that. But tech should like that right now, which is why you saw that massive pop. Gold is surging to the upside. Wow, gold is having a power move to the upside. Gold is ripping much, much higher. Natural gas is falling. Oil's rallying. The markets are taking this as a Fed pivot. That's what the bond market is pricing in. Historically, from cycles, even a Fed pivot sees more and more downside. But for now, markets are popping. And we're at the high of the range. We're at the high of the range. Nvidia didn't hit my next ad level. It came very, very close to doing so, which was at that 273 Pierce level. Didn't hit it though. It's pushing up though. Bitcoin's just really chopping in a range. Gold is surged up. Qs are surged up. Spiders are at the highs. Yields are at the lows. Banks have caught a little bit of reprieve. They've retraced to their breakdown zone. Nvidia almost hit our level, just shy. I have another order at 273 to short Nvidia. Spiders are at the highs. Qs are still pushing up. Apple's pushing up. And we'll see. Obviously, we've seen the first reaction happen here to the upside. The question is, does Powell like this reaction? You know, it's still interesting to see such a discrepancy in the 2-year yield. All right, I just got filled on NVIDIA at 273.05. Takes that average to 271.18. Spiders are rallying huge here. Qs are rallying, NVIDIA is rallying, everything is surging to the upside. It looks like now the Qs maybe want to push that 321 gap fill, but the spiders are acting very, very well right now. Will this continue? And we'll see if Powell smacks this market back down. But this is a phenomenal rally in the markets. Wow. And I just executed a short on AMD, added there. VIX is dropping substantially. Basically, I got filled on my NVIDIA, another ad at the 274.16 level. 274.16. That brings the average up to 272.03. Alright, I'm just going to hold that position now in NVIDIA. We still have the Powell press conference. A lot can change. A lot can change. And just keep in mind, this is all inflationary. All inflationary. Spiders are coming in off the highs, but still acting well. And really the big move should come with Powell as well. You know, the markets are rejoicing because the bond market is still not pricing in a 5% Federal Reserve. There's a 100-point BIP discrepancy, and here comes a little bit of a sell program. The VIX is spiking. So look at this little bit of a spike in the VIX. That's a big, big spike. So let's just let this settle out. I don't even think the market really knows. And again, this is what I'm looking at in terms of when I say the discrepancy between the bond market and Powell. So basically, Powell and the FOMC just took rates to 5% all the way up here. Look where we're trading. It's a 100 BIP basically discrepancy. And the bond market's still not believing the Fed. No accountability, no credibility from the Fed. Basically, this is why tech's rallying. You know, for instance, the Fed raised rates. Rates were at the highs today and they've fallen. Does that make really much sense? Not really. Doesn't. So I think that's where the Fed may have to come in and start to say, okay, like, we need to have a little bit more of a hawkish tone while still trying to soothe the banking issue. So that should be a challenging feat, but if anyone's capable of doing it, it is Mr. Powell. Markets are starting to come in. And often, when there's a lot of people on the short side and they see a big rally like this, they forces people to get the hell out of their shorts, and then they often can take it back down. So we'll see. Gold's pulled substantially off the highs. Natural gas is still under a lot of pressure. So the breadth in the market is still exceptionally weak. Most of this rally has come from mega cap tech. And we'll see if this is faded. We'll see if this rally gets faded. It likely means that this is the turning point in this market rally. Because the Qs right now on the daily chart are technically breaking out. But the day's not closed yet. So we are waiting. Bitcoin's seeing some weird price action. It doesn't know what to do. Usually Bitcoin always knows what to do, which is it wants to rally to the upside. And the fact that it's not really participating with this just is a little interesting. We have about 19 minutes till the Federal Reserve Chairman Jerome Powell starts dictating what he wants for the economy and the world, and we will see if he comes in more aggressive and hawkish. The bond market is settling at 4, but again, that's too much of a discrepancy in my mind. Dollar is trading at 102.70. It had a big dump. Doesn't mean it can't start moving higher. Often you see a shakeout of people riding the UUP, and I still think the dollar can move higher. I'm not finished with the dollar yet, and I don't think the dollar's finished with the markets yet. But we shall see. Lots of interesting price action here. Huge rips, squeezes out shorts, forces people to cover. And then what happens? And as of yesterday, the exposure to the downside was very great, being the fact that the put to call ratio is more skewed in favor of the calls. Trying to see some other stocks here. Home builders caught a nice bid off of that. So the S&P is obviously leading this dance. Right now they're trading above 400. But there's still a wide range channel that we're still trading in. And it'll be interesting to see how this hourly candle closes. Does it close above the previous intraday high, or does it close below? If this hourly candle closes below, then I think this rally was very short-lived and we'll likely see more downside. Now, if it closes above the previous intraday high, then I think we could actually retest that previous wick high. But again, with Powell lurking, he's watching all of this behind the scenes. Definitely. Big sell-off coming in the spiders now. Look at this. Wow, look at this move. This isn't even with the dollar popping or yield. Yields are flat, dollar's flat, but the spiders just dropped. And look at this. This is why we accumulate more NVIDIA. This is why we had our levels planned in our chat with like AMD, Meta, and a variety of other stocks. We prepared our members with levels. And now you are seeing the markets come in. So we will see if they come in any harder than this. And right now we are in the money on our NVIDIA day trade short by accumulating at those extra 2 levels. So definitely a good job. And the Dow is now negative, so industrials are continuing to be under pressure. Volatility is increasing. NVIDIA's got a nasty tail candle forming. Look at this. We're in the money now. Even a bigger position. And I have a 7-6 position, so I've accumulated just a little bit more. Gold's pulled off the highs substantially. The Qs are also fighting a topping tail. Russell's been a big loser. Look at the rejection on the KRE. Regional banks retraced basically perfectly to this breakdown zone. Look at that. Retraced. Boom. Rejection. Let's take a look at JPM. That's had a pop, but still negative on the session. Bank of America was weak. That's had a pop. Citigroup, that's had a pop. Let's take a look at the cloud stocks, IGV. That's now negative on the session. We'll take a look at SMH. That's had a big fall. But spiders are trying to bounce now. The VIX is starting to creep up as well. Bitcoin's trading below the previous high. We will see. Microsoft's still holding up well. Nvidia's still holding up. Apple's still up just under 1%. Nvidia up 3.7%. Tesla's now negative. GME still up 37% on the session. Dollar hasn't moved. Yields haven't moved. Natural gas is still falling. Still lots of distribution occurring. I think this initial pop was shorts were waiting on a pop on Nvidia. Now they're covering for a profit, but I do think we see more downside. You know, and it's gonna the hourly close on the spiders will be telling, because right now we're forming an hourly topping tail on the Qs, the Russell. Sorry, not on the Russell, because the Russell didn't take out the high, but the Qs and the SPY as of now have an hourly topping tail, and so does Nvidia, and it's still coming in. And Bitcoin's also got a distribution on the hourly chart occurring. And if the spiders take out that little intraday low before we had that big reversal, that's very negative. Very negative. 14 minutes till pow time. Pow pow. Yields are still at 4. Fed fund rate's at 5. 100 bip discrepancy. Meta's pulled off the highs. Even take a look at Meta. Meta, with our members, we executed, added to our position at 206.70 short. Meta, so that's pulled nicely in from the highs. Take a look at the Qs here. On the Qs hourly, this is also what I'm looking for. Basically, if we close back inside this previous high, that's bearish. If we continue to close above it in 12 minutes, that's a little slightly bullish. Spiders are still in this channel that we provided. So we have a little bit of time. Spiders are still digesting this information. Nvidia's pushing back up. Nvidia's getting a big push. Apple's pushing back up. Gold is too. Bitcoin's lagging. Qs are trying to push up again. Nvidia, you can see on the screen here, is also pushing up. Spiders are getting another round of buying. Maybe short covering. Who knows? Bit of both. So Nvidia is starting to perk back up. Spiders, big bounce on the intraday 10-minute chart. Nvidia is surging up again. Apple's also trying to surge higher. Dollar's still selling off here. Natural gas is weak. Google's remaining elevated. Spiders are now seeing another round of selling. In the grand scheme of things, you know, the price action has been pretty whippy. Obviously, the momentum has been net to the upside, but it hasn't really broken out of a range. You know, it's still stuck in that same hourly range on the S&P 500. It's still trading below the previous high, intraday high. So we really haven't made a big move. And the stocks that have made a big move are the mega caps yet again. And they're selling that is being disguised. The breadth of the market is deteriorating sharply through banks, through the Russell, through a lot of the smaller names. So there's a lot of selling that's going on with this recent pop in the markets, but it's the mega caps that are holding this market up, and that's the breadth. I mean, we've seen articles on Bloomberg just recently. We touched base on it last night in our video, and that market breadth is, the divergence is too great. Too great. Right now, the SPYs have an 8 minutes and 30 seconds till an hourly close. So it's interesting that the hourly candle will give us a good signal in terms of whether we should be leaning more bearish or positive today. And that hourly close happens right on Powell. Right on Powell's speech as soon as he opens his mouth. Natural gas is still seeing more sell side pressure. I just want to take a look at some of the other real estate stocks that we're shorting. You know, some of them have caught a little bit of a bid, but nothing too crazy. China stocks have basically just pulled off of the highs slightly. Nothing too crazy there. But Nvidia's up over 4.13%. Apple's up past its previous high. So if you look at the stocks that are above its intraday high, it's the mega caps. And then you look at the spiders, they're below the intraday high. So it's really the mega caps from the Qs that are lifting this market. And look at KRE again. Hard rejection and actually going to test the lows, making potentially new lows. Like, that's not very, very healthy. Coin also starting to come down, test the lows. Natural gas is falling even more now. So we're just watching this market chop around. Spiders are back below the highs. Dollar hasn't moved. Yields haven't moved. Apple's still up. Meta's pulled off the highs. Microsoft is starting to show some weakness. Now it's really going to, I think the market's really waiting for that next potential comment from Powell. Natural gas is still selling, down 6.33%. I mean, that's crazy. Natural gas is still falling sharply here. Might be interested in nat gas for a long on oil. Guys, I might do a little bit of a day trade long on UNG if we get a flush. If we get a flush. KRE just made a new low. Banks are getting demolished right now, making a new low. Look at that. Let's check out JPM. So the bigger banks are holding up. So if we look at the KBE, the relative strength is that they haven't taken out the low yet, but they're on the verge. KRE has made a new low, so definitely relative weakness. Russell is under pressure. Let's take a look at Bank of America again. And Citi, they're trying to move up. We'll flip back to NVIDIA. And again, I mean, the markets could close positive today, but could be faded tomorrow. It's like, but yeah, I'm still watching UNG for a potential little long day trade. KRE is at the lows still, coming in sharply. Nasty little hourly reversal. VIX is starting to creep back up. Let's take a look at the SPX. So basically what I'm watching on the SPX is, do we get a close below these previous highs or above? SMH still acting well. This is another one that's acting well. AMD. The market is still pricing in a Fed rate cut. There's an interesting little pattern on the 2-year yield that I'm watching too. It's actually an inverse head and shoulders that if we form this right shoulder, it's on the hourly chart, it's showing that the 2-year yield should have a break to that 5% level. I mean, let me pull it up here. So if we look on the hourly chart of this 2-year yield, look at this inverse head and shoulders that is potentially playing out. You have your left shoulder, you have your head, you have your right shoulder. If we get a pop on this right shoulder here, it's not formed yet and it hasn't broken out, but if we get a pop, like this takes you to that 5%, exactly where the Fed fund rate is. So there is a potential pattern that could play out here where it shows the market adjusting. But as of right now, markets are in the mind of their own. Traders are still pricing in a Fed cut, not believing the Powells and the FOMC aggression. Spiders have caught a big bid. A big bid. Bitcoin really hasn't responded. It's still under the previous high. Natural gas is trying to bounce. And we have Powell coming on in 2 minutes, guys. 2 minutes till Powell. Look at this Manchester United stock. It's rallying. Rallying up. Maybe another Saudi buyout, pulling their money out of Credit Suisse. Looking to go into a soccer club, football club. So Powell should be coming on very soon here. He gives his comments first, his outlook, and then the questions are also market moving. Natural gas got a big bid. Nice. All right, here comes Powell. So I'm going to go silent on the mic while he speaks. And if I see anything, we'll jump on.
Good afternoon. Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Colby Smith with the Financial Times. How confident is the committee that the recent stress that we've seen and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year, more than we'd expected at the time of the SCP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes maybe, some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
Mr. Chairman, can you explain the difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path will might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know.
Do you have concerns that the hike you did today could further exacerbate the problem in the banks?
No, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular our lending facilities.